Hi everyone, let's have a look at Link from an Elliott Wave point of view on the daily time frame. And in general, the probabilities are highest to take out the high at $31, with the main reason being that this move to the downside is a higher probability three-wave corrective structure in a double zigzag WXY. After a WXY, you look for price to return back to the origin of the WXY, which is the high at $31. So then let's have a look at the move towards the upside, which can be counted in a few different ways. But in this video, I will present the scenarios to you from highest probability to lowest probability. Starting then with the most bullish highest probability scenario at the moment, which is a multi-1-2. 1-2, 1-2, look for another 1-2 before then strong continuation to the upside in a wave 3, where preferably price is moving up with increasing volume, as commonly your wave 3 is the strongest, longest, most impulsive wave. Now your wave 1 here might be finished or maybe creates one more high, maybe touching that 886 that we have at 27,240, which is taken from the start to the end of the correction to the downside. But in general, you would like to see a little bit of a retracement in another wave 2. Target area for this wave 2 is $22 to $17, and the invalidation is the low here at $15. And then we go to the second scenario, a little bit lower probabilities for one main reason, which I will explain. So here we're looking for an impulse as well, which starts with a multi-1-2, similar to the previous scenario. Then we have wave 3, and we look for a double 4-5. Now in this scenario, wave 3 is very short, and that is what is less common. Because you can see that we would count 1, 2, 3, 4, 5 inside the higher degree 3. So you have a 1, 2, 3, 4, 5 impulse. And inside this wave 3, we have the lower degree 1, 2, 3, 4, 5, right? However, preferably, as mentioned earlier, wave 3 is the longest, strongest, most extended wave. And preferably, wave 3 inside wave 3 is the biggest one. But that's not the case here, because so far this move is shorter, which we would label wave 3, is shorter than your wave 1. That is not what you like to see and impacts the probabilities for this scenario negatively. Generally, a minimum target for a wave 3, an extended wave 3, which is most common, is the 1.618, and we did not even get close to the 1.618. Nonetheless, in this scenario, the short-term price action might be relatively similar, as you would look eventually for a retracement, which we label a wave 4, not a push to the upside in a wave 5 to finish the higher degree 3, get another 4 and another 5. What is important here, however, is that price is then moving to the upside, preferably with volume decreasing, as you are now working on your wave 4s and your wave 5s. And then we get to the final scenario, lowest probabilities, for one main reason, which is this structure to the downside. So here we have a regular impulse, 1, 2, 3, 4, 5 wave structure. Again, we are looking for another high, but then the subwave count of wave 3 has to either be a 1, 2, 3, 4, 5, which means your wave 3 again is very small and your wave 4 is a lot smaller compared to wave 2, while commonly wave 4 is similar in size or longer than wave 2, so not very nice. Or you have to count as a 1, 2, 3, 4, 5, but then your wave 4 here is actually really deep. If I take a Fibonacci from the low of that wave 2 to then the high of 3, then you can see that wave 4 almost on the logarithmic chart touched the 0.618, and the 618 would be an invalidation for a wave 4. But on the linear chart, we did touch the 618, and I do not like to see this. That is not great, even though I do like to use the logarithmic chart, mainly because price moved up over 100% to the upside, so I prefer to analyze on a log chart. I don't like the fact that on a linear chart it touched the 618, and on log it got quite close as well. So that is the reason why it has the lowest probabilities for me. Still, similar price action can be expected, looking for a retracement in a 4, another push up in a 5, but that is one more push to the upside, another high, preferably on a lower amount of volume. And the invalidation for this scenario is 17,979, basically this high here, because you don't want a wave 1 and a wave 4 to overlap. Similar to the previous scenario, you don't like wave 1 and wave 4 to overlap. So here the invalidation is 20.28. If price, by the way, would move down here and touch 22.28, then of course, again, your highest probability scenario here still remains. And then we get to the bearish scenario, which is a flat structure. So here, we then count the WXY to the downside as a larger wave A in a flat. So you look for wave A, wave B, and wave C. Now, even a wave B most commonly takes out the origin of A, which is the high at $31. But in this particular case, we need to count a move to the upside here being a three-wave structure. So either an ABC or a WXY double zigzag. Minimum target for a flat has not yet been reached, which is the 0.9 Fibonacci at 27,670. And that would be for a regular flat, which is A, B, and a five-wave move to the downside in C that takes out the low here of your wave A. So your target would be between 10 and $8 basically. However, that is not really something that I can give the highest probabilities to at the moment. What would make more sense, even in a bearish scenario, interestingly, would be some sort of a running flat, which in a very strong trend can be quite common. It's just not the highest probabilities at the moment. So this would be wave A. You get a wave B that takes out the $31 top, and then you get a C to the downside in five waves to end between 17 and 13, and then you continue to the upside. Now, it has to be said that in general, a running flat is the rarest flat structure, with an expanded flat and a regular flat both being more common, right, according to the theory, which both means a target below wave A. It's just difficult to imagine at the moment with the price action that we have that that is a high probability scenario. So this is the reason why I showed this scenario last. Now, I already covered the 886 shortly. It is very common for the 886 to show a reaction, so it's not very common for price to just move straight through the 886. Generally, you would expect price to eventually touch it and see a bit of a retracement to the downside. Now, the fibs you see here on my chart is a template that I have, 618 RT, which is 618 retest, because it happens quite often that price touches the 886, retraces to the golden pocket, and then continues and eventually takes out the high at $31. So it's just something that I want you to be aware of. Could play nicely in the hand of some of the scenarios as well, because as you can see, the golden pocket is part of the target area for a wave 2, right? The golden pocket here, at least the 6.6, is not overlapping with wave 1 in case we're looking for a wave 4. So it can still work. And here it also still works if we're looking for a 4 and another 5. So it's interesting to at least be aware of. So then we have the probabilities. Well, here you go. Probabilities are highest to take out this high at $31. A retracement before that happens, it can be expected, preferably in the most bullish scenario. We're looking for a retracement in 2. The second scenario, retracement in 4. Final scenario, retracement in a 4 as well. And then we have here a little bit of information. For the multi-1-2, we would like to see volume increase once the high is taken, because we're looking for a wave 3 to the upside. So preferably price extends very quickly on an increased amount of volume. And of course, the bullish structure remains intact. If we are looking for an impulse to the upside, the wave 5 here, 1, 2, 3, 4, 5, we want to see another high on a lower amount of volume. Again, this one does have the lowest probabilities though. And then we have wave 3 impulse, which is this one here, right? That's how I labeled them. So in this particular case, you could create another high here on maybe a higher amount of volume, because it's still a wave 3, but preferably wave 3 of wave 3 has the highest amount of volume. So preferably you move up on a decreasing amount of volume. Correction, impulse, correction, impulse. Now, as long as price is moving to the upside in 5 waves and moves down in 3 waves, we are simply looking for price to continue towards the upside. I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the altcoin analysis playlist, where you can find many more altcoin videos. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.